Yesterday I did a video in which I showed you the Bus 13 portfolio, and then I showed you the past history, the past 23 years on that, and showed you where some years they scored big returns and some years they showed losses. And I proposed that what if we could take out those years that showed losses, what would the results be? And I showed you an example of using Apple and NVIDIA, how it would improve their returns. Well, what I want to do today is show you the whole portfolio if we eliminated the losses, what it would be. And then I want to direct this to young people. I want them to say, or I want to explain that if you would put $6,000 a year into a Roth IRA and you picked companies that had a good track record, such as those in the Bus 13, and then you managed it by taking out the loss years, and that is done through a management technique using the 200-day moving average. So what I want to do in this video is direct it specifically. I wanted you to see the results if we do this for the whole portfolio for the 24 years and we do it in a Roth IRA. If you're a parent or a grandparent and you have a young child who's graduating from high school or college and are going to have a job, they need to see this video. It can be a life changer, but this is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
Okay, we've just opened our website where I have a platform that I can show this very easily and give you a connection to it so that you can share it with your grandchildren or your children or your spouse to say, hey, maybe this is something we should get involved in, and maybe if we can just put $6,000 aside a year in a Roth IRA, we're going to have a buttload of money that is tax-free when we get to retirement. So let's go to my computer. Let's go to the Best of Us Investors website. You can come along with me, and let's see what this might turn into. Okay, this is the Best of Us Investors website that just launched this week. When you come, you can see we invest in the future, not in the present. This is a welcome from me in which I explain to you how to become a member. I'll then direct you to our 3 levels. The platinum is for swing trading. The tribe is for the Discord conversation, and the premium plus is for what I'm about to show you. And so I'm going to go up here and I'm going to go to services, and these are the premium plus services. I'm going to take you to the Bus 13 portfolio. This is the portfolio that I have built for what I believe is the conversion of the current internet to the internet that is going to be able to handle artificial intelligence and machine learning. And then you see this is the history of those 21 stocks in the portfolio. This is a daily, weekly, yearly tracking of those, and as you can see, it speaks to it right as of today. So then where I would want you to go is up here where it says eliminate losses. This is what I did yesterday, and yesterday all I did was show you what would happen if we used Apple and NVIDIA. But what I'm showing you now is in more depth what would happen if you put $6,000 into a Roth IRA if you had started in 1999 and distributed amongst those stocks that were available at that time, and then did that through the following 24 years, and that would bring you to 2023. What I've listed down here then is what their average annual rate of return was over that period of time. Okay, then in yellow, I'm showing you those years where they showed a loss. All right, that all averages, comes over here. I put together a formula that says if you had put in $6,000 in 1999 and you had gotten an 86% return on your investment, that's the average that these got, driven very strongly by ASML that got a 273 and Oracle that got a 288, offsetting those who had losses. But the average was 86.4 6,148. Your 6,000 would have turned into 11,187. But the next year you would have shown a loss, and with an additional 6,000, that should make that 17. But because you had a loss, it's 15. If you follow the logic, we did that every year from 2019 from 1999 to 2023. And at that time, if you had done that, you today would have $9,061,845. Not a bad deal. But again, as I said in yesterday's video, what if we could take these losses and turn them into zeros? And what do I mean by that? Well, I'm saying if we had some sort of alert or key or awareness that Apple was going to lose 71% in 2000, and then again 35% in 2002, and then 26% loss in 2022, what would our return have been? So what we've done then is, because we took those losses out in 99, rather than an 86% return, we had a 90% return. Rather than the following year, we had a minus 14, we had a plus 10. And I think you can see the logic of what that happens. Well, again, we did the same $6,000 investing, but now, rather than having 9 million, we've got 53 million. And all we had to do was eliminate the losses. Well, how do you do that? Well, how you do it is you watch and make sure that your stocks don't fall below the 200-day moving average. And that's what we have over here on the first page on the bus 13. Apple's current price today is $191.47. Its 200-day moving average is $159.55. So it has a cushion of 16.6% away from that 159. And here we have every one of those stocks, and we do that. So if, in fact, it gets down to where it is going to, and here's one. This is actually, I think it's Google. No, it's ASML, $675 stock. Its 200-day moving average is 633. This is a tremendous stock. But if it goes below the 633, we sell. If it then comes back above the whatever the 200-day moving average is, then we buy. Let me take you to a graph and show you exactly how that works. Okay, this is my trading views chart on ASML. And as you can see, this is the stock price, and we're going back to roughly August of 2020. And you can see it's moving nicely above the 200-day moving average, and then it starts to fall, and there we sell. Okay, and you can see it stayed below the 200-day moving average from January 13th of 2022 until it went above it in November 9th of 2022. Okay, that's where we buy back in. Okay, so we missed all this loss. We bought back in. We wrote it here. It come and touched it. We may have been out. We may have been moved out for a day because it did go under it. But then as soon as it goes back over it, we buy back in. Okay? And we write it up here. Here it is right now. And as you can see, it's getting close to its 200-day moving average. If it falls below it, we sell it. If it then comes above it, we buy it. All we're doing is eliminating this. And we saw in our chart or in our study over on my website what difference this makes in our overall return. Now, again, how do you either subscribe to TradingView and you watch this daily, or you become a part of our program and I alert you to it. Okay? and I explain it to you, and we move forward. Okay, can you see why I'm so excited about this? If you can share this with a young person who's 23, 25, 32 years old, what a difference you can make in their life. I mean, all they got to do is have the discipline to come up with $6,000, use what I'm helping you here, and this will change. This will change over 23 years, 25 years. But if you'll pay attention to what is happening and how the world is evolving, how artificial intelligence is going to put a demand on those computers, and they've got to be upgraded, and we open our computer up and we see who the parts are and who's making those parts, and then we invest in those companies, and then we analyze and say, okay, now that's 40% of the growth of what artificial intelligence and machine learning is going to do. Now, what are the stocks that are going to deliver that artificial intelligence and make our lives easier, and how it's going to change the workforce, and who's going to facilitate that? That's bus 12. And then how is that going to affect our medical industry? That's bus 14. And who do we invest in? Do we invest in the pharma companies? Do we invest in the labs? Do we invest in the new people? Do we invest in the people who are using artificial intelligence to find drugs and therapies and what? It's just following the money, and it's just following the data. Because, again, who has the data makes this all possible. And, again, the data is owned by Amazon, Apple, Google, Meta, and then right now it's driven by NVIDIA. So if we'll keep those as the core of our portfolio and then adapt to the rest of it, to what the next change is, my God, this is becoming a level playing field. We're no longer competing with Wall Street, and we're no longer concerned about their trivial interest rates and inflation, because this is a train that can't be stopped, because it is technology, it is progression, it is disruption, and we're on top of it. So get on the bus, come have fun, we'll party in the evening. Talk to you later.